Access is honored to bring you the 22nd edition of the Inclusive Finance India Summit, which is now the Global Inclusive Finance Summit, being co-hosted with the Department of Financial Services, Ministry of Finance, Government of India. The summit has received consistent support and participation from sectoral stakeholders from within and outside the country. Financial inclusion and digital financial inclusion have received considerably high attention from stakeholders in the ecosystem, and we hope this summit will help in highlighting some of the important facets, opportunities, models, performance metrics, and issues. So we have 2 stimulating days packed with sessions and eminent and experienced speakers. We would also like to launch the much-awaited Inclusive Finance India Report 2025. I would like to inform you all that to save time, we are not providing detailed descriptions of the profiles of our experienced and eminent panel of speakers across the 2 days. These are very well captured in the summit's resource book. We request you all to refer to the document for the details of the panels. Thank you, Mia, for the beautiful recital. We hope you liked that beautiful start to a beautiful morning. Without further ado, may I now invite on stage Mr. Sudipto Saha, Head Financial Inclusion Access Development Services. May I request him to please join us on stage. Please join me in welcoming him with an applause. It is our privilege to welcome on stage our esteemed chief guest, Mr. M. Nagaraju, Secretary, Department of Financial Services, Ministry of Finance, Government of India. May I request the honored dignitary to please join us on the stage. A very warm welcome, sir. I now request Sudipto from Access to kindly welcome our esteemed chief guest on behalf of Access team with a bouquet of flowers. May I now request everyone to please kindly rise and stand in attention for the national anthem. Audio team, please play the national anthem. Thank you, everyone. I now invite Mr. Sudipto Saha, Head Financial Inclusion Access, for the formal summit welcome.
Good morning, everyone, and welcome you all to the 22nd Global Inclusive Finance Summit 2025, and wishing you all a very happy new year too. Special welcome and thanks to Mr. Nagaraju, Secretary DFS, for being with us today. It fills me with great pride that this is the 22nd Global Inclusive Finance Summit that Access is organizing. It started small when we first organized it in 2004, but now it's among the largest convening globally in the financial inclusion space. Several issues and challenges, breakthroughs and innovations on the ground that are advancing or impeding the campaign will get discussed across the 2 days of the summit in frank, forthright, sometimes fierce discussions across 23 sessions. During the 2 days, we have close to 125 thought leaders, policymakers, practitioners, bankers, technology providers, investors who share their views and perspectives in deftly moderated sessions. As has been the summit tradition, the annual Inclusive Finance India report will also be released today. The report highlights will be presented in this session by Mr. Arunachalam, editor of the report. As always, the report consists of insightful analysis of how financial inclusion has advanced in the country over the past 1 year. Now in its 17th year, this evening, the Inclusive Finance India Awards program will also see several institutions and individuals in various categories being felicitated for their contribution in financial inclusion. The awards have been instituted by Access in partnership with HSBC and are now coveted and well recognized in the sector. Before concluding, I would like to take this opportunity of thanking a record number of sponsors who have been associated with the summit, besides a large number of technical partners. Without this support, it would have been impossible for Access to organize such a large event. Lastly, I once again like to thank the large number of delegates who always manage to turn up in the summit. It's your active participation that makes the summit a buzzing event. Once again, welcome you all and I hope that the 2 days are interesting and exciting for all of us. Thank you very much.
Thank you, Mr. Saha. As is customary, we now move towards the release of the much-awaited annual publication, the Inclusive Finance India Report 2025, annually brought out by Access. The Inclusive Finance India State of Sector Report annually captures the landscape of financial inclusive initiatives, their progress, policy directives and issues and constraints. This year's report is authored by sector experts and senior researchers and academics, Mr. N. Srinivasan, Mr. Gaurav Gupta, Ms. Girija Srinivasan, Ms. Smita Premchandar, Ms. Anuradha Ray, Ms. Leora Clapper, and is edited by Mr. Ramesh Arunachalam. I invite on stage the authors of the Inclusive Finance India report. May I request them all to please join us on the stage for the release. Mr. Ramesh Arunachalam, independent consultant. Mr. Gaurav Gupta, financial sector expert. Ms. Smita Premchandar, Secretary Sampark. Ms. Leora Clapper, Lead Economist and Director, the World Bank. I also take the pleasure of requesting Mr. Vipin Sharma, CEO Access, to please join us on the stage for the release of the report. I thank all the esteemed dignitaries who have joined us on stage for the release. Can I request for a big round of applause, please? Thank you all for joining us on stage. Let's now hear it from the editor, Sri Ramesh Arunachalam, on the state of financial inclusion in India. May I request him to please share with us the highlights from the Inclusive Finance India Report 2025.
Yeah. Morning, everyone. Every time, this is the third year that I've edited. Thank you very much. I would like to thank Vipin, Sudipto, and Akash and Access for giving me this opportunity again. Thank all the authors, thank all the sponsors, thank all of you who've cooperated and shared information. So I've just got 10 minutes, so you can follow the PowerPoint, it's for you, but I'm an extempo speaker, so I'll speak as it goes along. So if you look at India's financial inclusion journey, it can be understood through three underlying themes. One is universal account ownership has been achieved at unprecedented scale, phenomenal scale. Second, mass digitization led by UPI and digital public infrastructure has transformed access to financial services. The third, millions of previously excluded individuals have entered the formal financial system. So the achievement marks a beginning rather than an endpoint, as chapter 13 nicely says. Inclusion has opened the door, brought in people to a journey. The central challenge going forward is to ensure that the journey along the pathway is smooth, sustained, and meaningful. Success at scale has surfaced a deeper issue. How do you retain first-time users and deepen their engagement with the formal financial system? So against this backdrop, the report has 13 chapters. It looks at every chapter in one way or the other looks at three core questions, right? So one is, are financial products aligned with users' cash flow and risk profiles? Is digitization an equalizer or does it cause exclusion? 3, is the inclusion architecture strong enough to build resilience against economic, climate, and technological shocks? So, and in essence, the larger question that all the chapters pose is, should India now move from extensive financial inclusion focused on access to intensive financial inclusion focused on usage, capability, resilience, and long-term financial well-being? So there are 13 chapters written by experienced authors, and I'll go through them very quickly. Chapter 1 is by Sri N. Srinivasan. He needs no introduction. He's a dear friend and a mentor. And he says his larger point is that microfinance should not move towards its perilous past, good governance, aligned incentives for institutions, and institutional sustainability are important along with expansion. The second chapter by another dear friend, Gaurav Gupta, looks at inclusion, the same problem, but from a different lens. So it's also a very interesting chapter. I'd encourage you to read it. It looks at financial health and resilience and asks whether banking-led inclusion improves households' long-term stability. The third chapter, written by Girija, another dear friend, highlights the strengths of SHGs as a solid institutional model for financial inclusion, but raises the question, but there is a question, can it help in enterprise lending? Okay. The fourth chapter looks at SME finance and contextual lending and says that I think we need to move from conventional lending to ecosystem-based lending, where you lend based on cash flows, income flows, value chains, and strategic context. The fifth chapter is a very interesting chapter, and you will hear from many of the private sector bankers here. You have Mr. Vaidyanathan, he's going to be talking to you. So there are 3 case studies. It makes a central point. Profitability and inclusion are not in conflict. They can go hand in hand, right? Provided you have good governance, provided you adapt yourself, and provided you have the institutional will. And I think so. There are 3 case studies. One is of IDFC First Bank, the second one is of HDFC, and the third one is ICICI. So have a look at that. The 6th chapter, I wanted to say this, it's again written by a dear friend. No IFI report will be complete without a chapter from Smita Premchandar, right? So she brought a very interesting take on gender and inclusion and asked the question, right? Okay, it differentiates between access and advancement and questions whether digitization supports women's graduation within categories of enterprises, and argues for capability and usage-based metrics. 7th chapter looks at inclusive insurance and pensions. Phenomenal scale has been achieved. Great scale has been achieved. The key question here is, how do you ensure that the first-time user continues to stay in the system? And that's the key focus of that chapter. Chapter 8 looks at one of the world's largest enterprise scaling programs. I can see Gigi here. And Pradhan Mantri Mudra Yojana, and I fondly remember his days at Mudra. And it's a huge program. It's achieved phenomenal scale. But then it looks at 2 questions there. Is there graduation from Sishu to Kishore to Tarun? And is there graduation by gender and other marginalized groups? Okay. The 9th chapter looks at digital financial inclusion and argues that your Aadhaar, your Jan Dhan, and UPI have transformed payments and have transformed inclusion in terms of transactions. But it raises the question that when you increase digitization, you increase the surface area. When the surface area increases, your risks also increases. So it calls attention to some of those issues there. The 10th chapter is a very interesting chapter on cybersecurity. It is no longer peripheral. It is central to inclusion. And if you want me as a digital user to continue using digital means, I need to have trust in that system. And it outlines the various steps taken by Government of India, MeitY, and the various institutions. And we've had long discussions with the Additional Secretary in MeitY. So very interesting things on data protection and cybersecurity has come in. Okay. The 11th chapter, written by N. Srinivasan, and I've co-authored it with him, looks at AgriStack, which is again done great stuff, which subsidies, your direct benefits transfers, your access to credit and insurance have all gone at scale. The question is whether you can enable resilience in all of this and help them continue in that. Okay, the 12th chapter looks at regional rural banks and cooperatives. They are the last mile. They have proximity, they have trust. But it says, this is authored by Ms. Anuradha and Mr. N. Srinivasan, and it says that's no longer sufficient. They need better governance, they need more capital, they need to adapt themselves to technology. And moving to the last chapter, From Access to Effective Use. It's written by somebody who's so well cited in inclusive finance, Leo Clapper. You're going to hear from her later. Pawan is going to be talking to her. That chapter says, access is not a destination, right? The real objective is effective use. Financial deepening, shock resilience, and capability are important. It says coverage is just a starting point. Okay, so what then are the key lessons from the report? There are 4 lessons, and with that I will close. 1, as we've been doing this research, we've found that institutions, we have a mature financial sector, and institutions are self-correcting and adapting. That's fantastic. And where product and institutional alignment have happened, financial health, resilience have been built. Third, digitization is moving from access-based to trust-based digitization. That's critical. And fourth, inclusion is no longer a one-size-fits-all approach. It's differentiated by gender, livelihoods, and value chains. So the report concludes by saying, India is at a consequential phase in the financial inclusion journey. It's been a trailblazer for access. The question is, the challenge now is to ensure that those who have entered the formal financial system continue to be there, use it meaningfully, remain there, and build resilience over time. Sustained financial inclusion, grounded in capability, trust, and stability, must define the next phase of progress. I'm extremely sure, I'm very, very certain and sure that India will be a trailblazer in that. On that note, I conclude my speech. Thank you, ladies and gentlemen.
Thank you, Mr. Arunachalam. Ladies and gentlemen, it is a privilege to have in our midst today Mr. M. Nagaraju. Before I invite him to deliver the keynote address, a brief introduction to the esteemed dignitary. He joined the Indian Administrative Service in 1993 and holds a master's in philosophy and is an alumnus of University of Hyderabad. He was a visiting fellow at the University of Pennsylvania, USA for 1 year from 2012 to 2013 and visiting research scholar in Stonehill College in 2018 and 19. He joined as Joint Secretary, Ministry of Coal on January 30, 2020 and promoted as Additional Secretary, Ministry of Coal from 2020 onwards in the month of November and continued to work in the same ministry. Sri Nagaraju got promoted as Secretary to Government of India and was immediately appointed as Secretary, Department of Financial Services with effect from August 19, 2024. It is an honor to have you here with us, sir. May I request you to please kindly deliver the keynote address. Please join me in extending a warm applause.
Thank you very much. Good morning, ladies and gentlemen. Mr. Vipin Sharma, CEO, Access Development Services, and Mr. Sudip Saha, Director, Financial Inclusion, and all the distinguished guests, participants, and the delegates, and also my colleagues from several banks. I could see that. Honestly, I'm actually delighted to be with you today. Like last year also we had a very wonderful conference, and I actually find this year the discussants or the participants are much more experienced and done great service in the great expertise in the sector. So congratulations to the Access, and let me also congratulate Access for organizing the world's biggest financial inclusion conference, running 22 years. It's not a, I think all of us know, it's very difficult to do this in a sector which is not organized when it was started, always face challenges, and completely loosely connected audience, stakeholders, everything. So my huge congratulations to Access for doing this. It's a great service to the country. Now, I am very conscious. I think all of you are experts on the financial inclusion, but so if I say anything, that is actually preaching to the priest. But let me with courageously say something which I feel about financial inclusion. You know, the financial inclusion has been recognized as a key driver of economic growth and poverty elevation, at least as far as I remember in the last 35 years, in different fora, different summits, both bilateral, multilateral, and even governmental level. And its impact has been felt in many countries, not just India, but many countries all over the world. Therefore, its prominence in the, firstly in the multilateral forums, multilateral development forums, and then the developing countries. In fact, it has a multiplier effect on economic growth and helping in reducing poverty and income inequality. The one thing I always remember, financial inclusion was the way the Latin America has changed with the financial inclusion. One of the earliest countries to adopt financial inclusion by the we call SHG groups. There they have collectives and other groups. Now, with this, the world is now much better with the financial inclusion as a fundamental principle of economic growth and bringing the poor out of poverty. I think all of you know, 7 out of the 17 Sustainable Development Goals view financial inclusion as a key enabler for achieving sustainable development worldwide by improving the quality of lives of poor and marginal sections of the society. I think I would rate the launching of the National Mission on Financial Inclusion, that is Pradhan Mantri Jan Dhan Yojana, on 28th of August 2014 by the Honorable Prime Minister as one of the most transformative days in India's history. In fact, I was in my state as a principal secretary, was in charge of this. I could not imagine this could be such a transformative journey for everyone, for the country as a whole. Now, the mission, they had 3 pillars, I think all of you know: banking the unbanked, securing the unsecured, and funding the unfunded. All 3 of the pillars have several pillars within themselves. Each one is wide-ranging, has wide-ranging implications for the poor especially. And because of these 3 pillars, we made it possible to adopt multi-stakeholders collaborative approach while leveraging technology for serving the unserved and underserved areas as well. You know, we have now launched recently a special campaign to weed out dormant and inactive accounts and also to bring in new accounts. We have done that, and we did about 3 crore, little more than 3 crore new accounts we added in the last 3 months. And currently we have about 57 crore Jan Dhan accounts. I think that is unimaginable when this was launched in the country. 57 crore people have bank accounts in India, and most of them are actually poor from the rural areas and marginal sections. And I have personal experience of several years in this sector. So my personal experience always been very reinvigorating and also very inspiring to meet and talk to these people, how it has changed their lives. The report, what Mr. Arunachalam has brought out, I just had glimpsed it. It actually brought out very vividly the multifarious benefits the mission has. Now, 72% of the accounts belong to rural and semi-urban areas. 56% accounts are held by women account holders. As a result, overall gender gap in respect of account ownership has almost become 0. Now, our deposits have increased to 2.82 lakh crore. And in fact, this is the biggest amount they have. In fact, I always felt, apart from the numbers, what has changed in the rural areas is the way the women actually started perceiving themselves as equal stakeholders in economic development of the family, as in fact is given a lot of empowerment to the women, And children also started looking at their mothers in a different lens compared compared to previously, because they don't have decision-making powers in the economic sphere. Now they had money, they have money in their accounts. These accounts was able to possible. Not only the central government money is going and different schemes, but large number of state governments also actually debiting funds to the women beneficiaries. That has given great empowerment signal to the society as a whole. Now, I think all of us know the JAM Trinity, the DPI, which has played a critical role in moving the ownership of transaction accounts from approximately 1/4 of adults in 2008 to over 95% now. A milestone that would have required normally 47 years to achieve as per a BIS research paper. Now, BC banking correspondents we have to the tune of 16 lakh. Imagine 16 lakh BCs going around in the villages, mohallas, streets, actually trying to bring people, first opening the accounts and then providing banking services. This is unimaginable in any other society, but we have been successfully doing. In fact, this also enabled large-scale authorization of banking transaction, including cash withdrawal and remittances, which has helped millions during the COVID time. I think all of us know during COVID time how our society has transformed. This has really helped during COVID time. Now, coming to the branches opening in the country, 99.9% of villages mapped on our Jan Darshak app have been covered with bank branches or FI touch points. 21.8 lakh touch points now currently. That is approximately 99.9. We have only challenges in a couple of states. In those states also, not all districts, but some villages in like Arunachal Pradesh, Nagaland, where it is very difficult to even access normally. We are trying to design certain new things there. I hope by end of this year, we'll be having a touch point even in those remotest places within 5 kilometers. We are actually thinking of adopting a cluster-based approach there in the Northeast, so that Northeast is also on par with the rest of the country. The expanded banking network created under PM Jan Dhan Yojana is also being leveraged to provide and life accident cover, I think all of you know, for Jan Suraksha and Pradhan Mantri Bima Suraksha Yojana. These two schemes. And the third one, Atal Pension Yojana. The premium of 20 rupees and also for the Bima Yojana 436 rupees actually have brought large number of families in the rural areas to risk coverage, pension security and accidents. Now, Atal Pension Yojana also, we are doing well. Now we have all these three schemes. Now enrollment has reached under these schemes, under Suraksha Bima Yojana 56 crore, Jeevan Jyoti 26.24 crore, and Atal Pension Yojana 8.6 crore. These are, we actually looks for us in numbers, but imagine the families in the rural and semi-urban areas. Having this kind of security is unimaginable, because mostly our financial system is focused in the urban areas, metro areas, but nobody goes there. Because the government support and also support of the state government, we are able to provide this access to large number of people. One thing I liked in the report that was mentioned by Arunachalam is the Mudra scheme. Mudra is, I think all of you know, Mudra and Stand Up India. The Mudra is the world's biggest credit scheme in the world, which is guaranteed by the government. And since its launch in April 15, more than 56.32 crore loans amounting to almost 38 lakh crore have been sanctioned. While 67% Mudra loans have been sanctioned to women entrepreneurs, 48% loans have been given to SC, ST, and OBC categories. Tarun Plus, which we launched last year to provide credit support to those entrepreneurs who have done very well and want to migrate to the next level. Similarly, since April 2016, a total of 2.75 lakh loans amounting to 62,000 crore have been sanctioned under Stand Up India. We're trying to revise Stand Up India scheme shortly. We hope want to provide larger loans to more number of people from the SCST beneficiaries. And even in the Stand Up India scheme, the women participation is higher compared to the men. In fact, among the SCST, we should all recognize the aspiration for women is higher compared to the men. Now, it is also important to highlight the Government of India's steadfast support for the informal sector through transformative initiatives such as PM Swanidhi and PM Vishwakarma, and which are pivotal in advancing the goal of financial inclusion by creating new avenues for micro units and strengthening the overall MSME ecosystem. So far, a total of 5.34 lakh applications amounting to 4,602 crores have been sanctioned under PM Vishwakarma, with the corresponding disbursement of 3,700 crores. Now, I think all of us, this is a proud thing for us, the UPI. I think all of us know. You see, everybody now, foreign delegations within the country, everyone is take great pride in saying that India now leads in the digital transactions. We almost do about 50% of real-time transactions, digital. Now we have expanded to 7 countries. We are trying to expand to a large number of countries. Especially we are focusing in East Asia now. And we are also trying to provide access to our fintechs in the digital payment ecosystem, to provide access through our trade deals. And I think as and when we are actually doing the trade deals, we are also keeping that access so that our ecosystem is not denied. Now, our UPI has outnumbered CAGR of 101% during the last 10 years, in fact 8 years. It has created a benchmark by recording the monthly transactions of more than 21 billion in December 2025. The success of UPI and digital transactions could also be attributed to manifold growth in the PMJDY accounts, along with the increase in average balance in these accounts. The cash flow pattern associated with the higher deposit per account and DBTs in Jan Dhan accounts has helped in creating digital footprint for new to credit persons, which is now used by lending institutions to assess their credit worthiness, accordingly offer customized credit solutions as per the needs and requirements of customers. Now, DFS is administering and managing another innovative credit guarantee model through National Credit Guarantee Trust Company, an umbrella trust company operating 15 operable credit guarantee funds launched by Government of India for different cross-section and segments of economy like micro and small enterprises, women enterprises, women entrepreneurs, startups, and students. Disadvantaged sections, skill and vocational training needs, etc., to partially mitigate lenders' credit risk in advancing credit to them. A system of inter-transferability of funds among various credit guarantee funds has also put in place, thereby enabling NCGTC to optimize utilization of funds from the fiscal prudence perspective, as well as to reduce immediate recourse to Government of India for replacement of guarantee corpus under any of the 11 credit guarantee funds. As a result, NCGTC has been able to provide guarantee for a total sanctioned loan of over 9 lakh crore against a cumulative committed corpus of just less than 1 lakh crore. AA framework, account aggregator framework, is one of the innovative initiatives undertaken in the field of digital public infrastructure, with RBI playing a pivotal role in providing level playing field to all the stakeholders for consent-based retrieving, collecting, and sharing customers' financial information across different financial institutions. While putting this framework in place as public good, the central bank has encouraged borrowers, especially the financial information providers and the financial information users, to use this platform for sharing of financial information on a real-time basis by suitably addressing the challenges related to data privacy and security. During the whole of 2025, DFS financial inclusion efforts were focused towards outreach and reaching the doorsteps and neighborhoods. A 4-month Jan Suraksha saturation from 1st of July to 31st October 25 resulted in opening of 1.1 crore PMJDY accounts. I think I mentioned 3 crore, 1.13 PMJDY accounts, 1.41 Jivan Jyoti accounts, and 2.9 Suraksha Bema accounts in this 4-month campaign. And in this campaign, we also done re-KYC of dormant and inactive accounts for 5.2 crore accounts. And we have updated succession nomination in the bank accounts for 1.2 crore accounts. A large number of accounts are dormant, there are no nominations, and all kinds of hassle for the citizens. We were able to do something on this front. And another campaign we recently launched, we completed last month, is a campaign for delivery of unclaimed assets to their rightful owners, in resulting in a delivery of more than 2,000 crore of assets to rightful owners or their next of kin. The journey of PMJDY-led interventions over the last 7 years has in effect produced both transformational as well as directional change, thereby making the emerging FI ecosystem capable of delivering financial services to the last person of the society, the poorest of the poor, and its success has been recognized globally. However, I also take this opportunity to share some of the areas where further improvement is required to make our FI ecosystem more robust, transparent, and hassle-free for all stakeholders. Number one, the issue of re-KYC for a large number of PMJDY accounts opened in initial phase of scheme remains critical. Banks, with the help of technology providers and regulator, has to find solutions quickly so that the gains made in the area of account opening are not frittered away. Second, financial literacy is crucial for empowering consumers and ensuring that they understand their rights and responsibilities as users of financial services. At the same time, consumer protection rules also need to be reviewed, as financial services are nowadays also being extended through non-traditional channels. There is also need to further strengthen the consumer grievances mechanism for timely redressal. 3, containment of cybersecurity risk and prevention of digital frauds are already a priority area for the government as well as the regulators. I also request all active players, including the consumers of the banking ecosystem, to be more vigilant and prudent while undertaking a financial transaction. In the end, I call upon all the professional, market practitioners, and academia present here for the Global Inclusive Finance Summit to deliberate, discuss, and share their views for charting the future roadmap for the fast-evolving FI ecosystem of India. The roadmap I personally see, I think, is I can actually put in 3 pillars what the DFS has done in 2015. One, financial inclusion should lead to financial literacy, and financial literacy should lead to financial security. This financial security should include, again, 3 pillars. One is credit, risk coverage, and pensions. I think we are not thinking about that. All 3 are very important segments for population. Now we have one of the lowest median age population in the country. Unless we think about these 3, we should have accounts, ensure the risk is covered, and means insurance, and then they have pension security at the old age. I think if these 3 are able to embed in the financial inclusion agenda and campaign, I think country is going to be much safer, much strengthened, and much confident to march to the next century. For that, I think I also emphasize what the study has mentioned, Arnachalam. I think we also need to come up with we have to also embed skills to the borrowers and credit guarantees. We are doing it, but I think it is not sufficient. We need to provide more credit guarantees and then try to scale up the small micro units into medium enterprises. The graduation of micro units into medium and large enterprises is actually not happening in the country, despite having a few crores of units in the country. I think that will happen only when the micro enterprises get a lot of support, market access, and also productivity gains, both through the technology as well as hard work. With these words, I thank Access for inviting me and to all of you for giving me very patient hearing. Thank you so much.
Thank you, sir, for your inspiring and very thought-provoking address and setting the tone and direction for the next 2 days of the summit. We'd like to present our esteemed chief guest with a small memento as a token of our appreciation and gratitude. May I request Mr. Vipin Sharma, CEO Access, to please join us on stage to kindly present a small shawl as a token on behalf of all the organizers, sponsors, partners, and the entire Access team. It's a small token of our thanks and gratitude, sir. We'd once again like to thank our esteemed chief guest and Mr. Sharma for joining us on stage to do the honors. Thanks again to you all, ladies and gentlemen, for joining us for this inaugural session.